Hello there, it's Coach Francis here from Generational Wealth Academy. Okay, so today I'm going to be, sharing with you, the SureFire strategy. The SureFire strategy. I think I have a bit of a sore throat, so bear with me. Yes, I mean the SureFire strategy is one which I have been trading for a while, and obviously I have talked about it, in our VIP trading community. It's a strategy that delivers, between anywhere between 70 to 90%, winning rate. 70%, I would say, for those who are just starting out with it, if you're able to learn it, which is very easy and straightforward to do, you should be able to get, like 70% overall, which basically means you should be able to win 7 out of every 10 trades. 7 out of every 10 trades. That is very high. So let's just get on with it. You can see here, this is the 5 minute time frame. You know, most of you are used to these boxes on the chart. This obviously, I'm sure, like is the Frankfurter, which basically opens and closes, between the hours of 7 and 8. So you could decide to trade, the surefire strategy, between 7 and 8, or later on in the day, between 2 o'clock and 3 o'clock UK time. So both of them UK time. This is run about when the New York market opens, the New York session, and this is when the European session opens. I mean, the European session obviously starts at 7 UK time, till about 8 when the London session starts. But hey, let's, work with the European session. That's basically the one I tend to use. So now, really, you don't really have to have the box there. You don't have to have the box. We are having the box just to make it easier. What we really want is um, the first 15-minute candle when the market opens. So you can see this is a 5 minute. So let's make it 15. So you basically really want um, the first um, 15 minutes of the market open. So if you were to mark it out there, mark it mark out the top and the bottom. Let's take this off for now. If you were to mark out the top and the bottom, that should be, you know, the first 15 minutes. So what you're basically wanting is to trade the breakout of this range. This is a range, this is the range of this 15-minute candle. You want to trade the breakout. Now, on some MT4, if you were to switch time frames, this horizontal line might disappear. Let's just see what happens on this one. Okay, well, okay, fine. It's still there on this one, but I know on some brokers, if you were to switch time frames, it disappears. So you can see, between this, the low of this candle, let's take this off as well, guys. The low of this candle and the high of this one is basically what makes up that 15-minute candle. I'm sure you know, obviously, this being the 5 minute, it's made up of three 5 minute candles, which adds up to 15. So what you then want to do is to wait for the price to break out above or break out to the upside or to the downside, and then you could be thinking of jumping in for a trade. Now, this is pound USD. What I mean, the strategy works on all pairs as long as you follow the criteria. But what I usually tend to do is to trade USD related pairs during the US session and euro or pound pairs during the London session. Now, this being pound USD, we are okay with that. Like I say, it can work with all pairs, even if it's not, you know, um, you know, related to the particular time frame. So what we want to do here is wait for the price to break out like it has done here. It broke out. We want it to come back in this range. This is a range. You know, this is the high of the range and this is the low. We want it to break back into this range. I mean, yes, there are times when you would just want it to come and retest, which basically means the candle comes back and touches this bit and moves back up, leaving a wick. But what is going to work out best, more profitably, as it were, is to actually wait for the price to actually come in and close inside. Then, when it's going back out, you enter the trade. Now, this is not exactly a brilliant example. I'll come back to this one to see how you would have traded it. Because think of it, you actually you could have won all this. But anyway, this is not a brilliant example just yet until I show you some other things. So let's go to the let's go to the New York session now. We are wanting the first three candles. I mean, obviously the candle that opens right here is the first one. So this is 1, 2, 3. So let's do this. Let's move this to the high of the candle, the first of the candle, and the low. It so happens that the high and the low of those three candles, is formed by just this one candle, which is fine. So with this one now, what are we wanting? Let's make it smaller. We are wanting the price to either break out to the upside or the downside. On this occasion, it broke to the downside because if you see here, see what's happening. It did actually go above. It actually went above. You know what? Let's change this color so that, by the way, let's do this as well. Let's do this. So that's the time for the New York session. And this is the time for that's the time for the Euro session. This is the time for the New York session. Let's just change the color so that we can actually see the color of the candles properly as well. So, you know what? Let me show you that again. So you take note of the time. The time will change obviously according to the season of the year, the time of the year, but this is usually the time, at least as of the time of this recording on the 3rd of December 2024. Okay, so this is basically what you want. You can see the price when the market opened, it formed this candle, this 5 minute candle, these 3 5 minute candles. The fourth one basically broke out of that range. Note that the high, you know, the range of the SureFire is between the top yellow line and the bottom yellow line. So the price actually broke out of the range of the SureFire. It broke out of the SureFire range, and then came back in and closed. So that doesn't count. We want it to be that the price actually goes out, closes above, comes back in and out again before we buy. That did not happen here. So what happened here was it broke to the downside, which was what we want, went back in, which is what we want, which is the retest. The retest is it going back into the range. And then when it begins to come back out, then you pull the trigger for a sell. Now it came back and closed out here. Okay, this basically just closed out about here. I suppose you could get away with that because there are times when the price closes more or less on the line. You don't want it like that. You want it to be that the price actually closes in a very clear way. So you could work with this. Now, what are we going to be targeting as TP1? At least from here to here, which is the range of the which is the range of um, the surefire range. That's going to be TP1. Now, like I have said before, I usually would prefer the range to be at least 10 pips, 10, 15 pips. This is 7. Hmm, could I actually still work with this? Okay, I'm sure I can. Why? Because if you were to check this, you will see it is at an area where it's most likely going to go down, to target this low. Otherwise, if you were to stick your moving averages on here, that might give you a clue as to where the price is going. On this occasion, I'm using the 50 SMA and the 200 SMA. Okay, so this doesn't quite tell you, it's drop, it's going to drop, because there are times when the moving average would give you the a clue as to the direction of the trade, of the trend. On this occasion, it doesn't. I mean, looking at this, you could think, oh, this is going to go up. It did eventually go up, but it went down first. That's not what you want. You don't want to lose a trade like that. So the moving averages are just an indicator you could use for confirmation. you know Price is king. What price does is what to go with. The moving average should support what the price is saying. On this occasion, the moving averages don't exactly support the price. We are going to probably see an example where that happens. So let's just basically say, we on this occasion, you know we entered our trade here for 7. you know it does help if understand a bit of price action, as in structure and all that. Support and resistance. Like I said earlier on, we see that the price is at some sort of support level. The price broke down here. We can see here that was support. And what happened? It so happened that when it closed outside of that range, it basically, that's here, it basically just kept on dropping, giving you way more than 2 to 1. Well, more than 3 to 1. So we see here that was a good example of a SureFire entry. This is obviously, like I said, this was today's US session, but during the the London session, you would not have necessarily traded this, except if you had used the moving average as confluence. And as you can see here, the moving average, basically the 50 crossing the 200, gives you a clue that the price is going to go up. So you needed the moving average here, or if you have any other indicator that gives you an idea of where the price is going, but I use the moving average. The 50 is crossing um, the the 200, indicating that it's going up, and boom, it went up. Otherwise, if you were going to go with just the price action as on its own, you might not have necessarily gone in, because like I said a while ago, we are working with the first 3 candles on the 5-minute time frame. This is the low of that candle, and this is the third candle. 1, 2, 3. This is a 5-minute candle. So we want to mark out the range of the first 3 candles, which is the first 15 minutes, and that's what you want to trade. Like I said a while ago, the price went out. We would have wanted it to come back in, and when it's going back out, we jump, we pull the trigger, but it did not come back. It did not come to retest this area, except that looking at this, knowing fully well that the moving average tells us it's bullish, hey, we would jump in anyhow. Once it broke, after all, if you consider the fact that you know this candle broke, it continued with the other one, there was a follow through. There was actually a wick on this one, so you could say it came to retest. Like I said, the kind of retest I would want really is a retest where the whole of the candle basically comes back into the range. On this occasion, it did not. Okay, so we see here that on this occasion the price did not retest by coming in back into the zone, but it gave a retest which was just a wick on there. So that would have been fine to jump in anyway. You still would target the range of that. On this occasion, you see it's 12, 12 12 pips. The range of the SureFire range is 12 pips. Your TP1 would have been 12 pips. Of course, you will target, the nearest high. Let's just make this smaller. I mean, well, that was a previous high. That was another high. And you can see it went and hit the previous high, giving you how many? Giving you almost, well, it did go higher. It gave you 3 to 1. So you can see the SureFire strategy is a super duper strategy. Um, there, there's another video, or at least there are one or two other videos which I have done on SureFire to further explain it. I would say to watch those. I went in more detail, as to how to use the moving average. But in a nutshell, like I have explained now, what you want is for the price to break out of the range, either to the upside or to the downside, and you are good to go. So on other occasions, the price could break out, like it could break out to the upside and not come back in. Like here, it just keeps on going. That's a different scenario. What we're going to do now is to look at another pair. This is GJ. I want us to look at I want us to look at Euro JPY, which I would preferably trade during the um, New York, sorry, during the London session. Whereas sorry, not GJ, Euro Aussie dollar, where is it? Let's just look for it quickly. Euro Aussie dollar, where are you? Okay, it's hiding away somewhere. Okay, so this is Euro JPY. This was a London session. Let's just bring it in view. So on the 5 minute time frame, we will mark out that's the first candle, and this is the low of it. So it's 1, 2, 3 candles. You know, uh, this basically will. So what I'm looking for here, you can see, when the market opened, the first 5 minute candles, 10 minute candle, the 15 minute candle, the price broke to the upside. Okay, fine. And the beauty about this strategy is that you would most likely get a trade early enough. Within 1 or 2 hours of the market open, you will most likely get a trade. Not all the time, but sometimes. Well, most of the time you would. Now the price broke out, and guess what? It came here and bounced off the top of the range. This is a retest, but not the kind of retest we want. We want it to actually come in and close. It went up again. Well, it basically closed here, came all the way even deeper. But guess what? It refused to close inside, which obviously shows the bulls were in charge. And it went up and closed there. What I would have done, I would have entered the trade anyhow for a buy. Why? Again, the moving averages tell you it's an uptrend. Now, this I'm using the 50 and the 30. I know some of you might know that in the past I also love to use the 30. Any which one you use really, it's fine. I just chose to use the 50 here because we want to be really sure. I mean, the 50 perhaps will give a stronger um, idea, a stronger confirmation. So what happened this time? It did not close. It went out. I would have entered. I would I would have gone with the range of that candle, the range of the SureFire, which is 16, which is beautiful. Now, can we get 16 from here? Well, we did. So we got a 1 to 1. Mind you, even though it closed here, it had actually pulled back a bit. So you could have entered a second time. I usually would recommend at least 2 entries anyway. But even if you decide to take it from here, guess what happened? It gave you 1 to 1, more than 1 to 1, pull back and went even more. giving you like 3 to 1 because the range here was about 15. So it gave you about 2 to 1 you know, risk to reward, which obviously is super. So this was today's session as well. Let's look at the New York session. We're looking for the first 3 candles. We're looking for that. That is the low. That's the low of the first candle. Actually, the third candle, 1, 2, 3. The third candle is that high. We're looking for a break to the outside of downside. It broke to the outside, but it did not close inside. So that's not what we want. We want it to actually break out of it and close. When it happens like this, you know, we say, the high was not displaced. If it closes above, it means it took out the high. It was displaced, but no, it didn't. It broke, but came and closed back inside and came outside to the downside. So what do we want here? We want to see it go and retest. It came and retested the low here, went above, but came back out, went inside and closed inside the range, which is what we want, the proper retest we want. And when it closes here, we enter here for a sell. Now measure the range of the SureFire 23, which is basically what we are going to use as TP1. You might not always get TP2 or TP3 or so on and so forth. Sometimes you might not even get TP1. Well, most of the time, well, just take it that way. Target a minimum TP1. If it's going to give you more, go for it. Be quick to move your stop loss to break even. So you would have entered here. Like I said, we are targeting 23 pips. You would have entered here, and guess what happened? It gave you more than 23 pips. So if you hit TP1, you have won that trade. You would find out, guys, that this strategy would give you a winning rate of between 70 to 90. If you're just starting out, I'm sure you'll be able to get you'll be able to get 70 at least. But as you begin to perfect it, you start working your way to getting an even higher win rate. Watch out for the second video. If you've seen this one and you've not seen the second video, feel free to ask me for it, and you should be able to, um, you know, even gain more experience as it relates to different nuances that play out even with this strategy. Okay, guys, enjoy, enjoy, enjoy your winning trades. Sorry, I do apologize. I just realized I didn't quite tell you where the stop loss would be. I mean, obviously, the stop loss would be on the other side, you know, on the other side of the range. Since you were selling here, your stop loss would be, on the other side of the range. you know, this is the high of that range. You know, this is not exactly a Frankfurter or Frankfurter Plus strategy in a sense. So you are not going to be working with the box. I mean, this is the high of the range of the Frankfurter or the Frankfurter Plus box or the wealthy place box, but you are working with the range of the SureFire, which you have drawn out using this. So you know, just consider the average range of all these candles here. Let's just choose one, which is about 19 pips. You could decide, okay, fine, this is the high of it. Let me, use about 19 pips as stop loss or less. It doesn't have to be one ATR. ATR is average true range, and taking a range of 19 pips here, if you were to consider others, 16 pips, 15 pips, this is a big one. But if you look at the last 14 candles, the average range will be about 14 or 16 pips. So you can say from here to here, 15 pips, place your stop loss there and you should be fine. Okay, guys. Is there anything else to say? No, nothing else really to say. Okay, now, even though the stop loss sometimes might appear bigger than the take profit, believe me, it would usually not come back to the stop loss. Even if it does, as it is the case that you're going to have a high winning rate anyway. The few times when you lose would not, you know, put a dent on your account as such. Okay, guys, have a winning time.